And welcome to Business Lunch. I'm Nisha Podar, and with me as always is my co-anchor Pavitra Parekh. So Pavitra, tentativeness really persists in the market even though Nifty50 holds up above the 18,000 level. But really look at the trajectory at the moment, almost on the flat line. At the moment, 18,330 clocked in on Nifty50. But if you really look at the overall trajectory in a very tight range, it has gone through its enough share of volatility in the first half of the trading session today. When we look at Bank Nifty, that is seeing a huge amount of buying as well as interest coming in from the investors. Also remember, banks and the blue chip banks are always the quasi investment for the economy going forward, and sometimes safe haven as well. So 0.3% up in Bank Nifty, outperforming the indices. The mid-cap universe is underperforming the key indices today and is in the red, though flattish. So at the moment, advanced decline ratio and the market breadth on the weaker side, though I would say that looking at the mid-cap universe not participating as much, it is still stable. Some of the auto counters looking very good in trade. ONGC really doing well, but Coal India is a spot of bother, over 6% down in trade at the moment, Pavitra.
Coal India is ex-dividend. That one is seeing some sharp cuts. Like you pointed out, this is a quiet day of trade, but at least we've moved into the green now. What's not quiet, guys, by the way, is what's going on in the rest of Asia. So pull up some of those markets. You'll see what's going on in the Hong Kong markets, in Taiwan, and those indices are seeing sharp moves. So Hong Kong is now almost 4% in the green. Taiwan seeing gains of 2.5%. So good momentum in those markets. For our own markets, like Nisha was pointing out, the auto pack doing well. You also have NTPC, so some of the PSUs also holding up well in trade today. On the downside, the real estate index is suffering the biggest cuts. Reliance also seeing a little bit of weakness today in trade, and some of the larger IT names are under pressure. So the likes of Tech Mahindra, TCS seeing some cuts. So that's what's going on with the market action. We'll come back to this. But first up, here is an exclusive. The Indian economy has seen a V-shaped recovery. That is the word coming in from Home Minister Amit Shah. Speaking to Network 18 Editor-in-Chief Rahul Joshi, he also said that the government has a roadmap to tackle the inflation situation. So let's listen into that.
जहाँ तक महंगाई का सवाल है, पहले कोरोना के कारण और बाद में रशिया और यूक्रेन के युद्ध के कारण पूरे विश्व की सप्लाई चेन में बिखराव है और एक वैश्विक समस्या है जिसका असर कम मात्रा में भारत पर भी पड़ा है। मगर मैं देश की जनता को, गुजरात की जनता को सुनिश्चित करना चाहता हूं कि टेम्पररी फेज है। नरेंद्र मोदी सरकार ने बहुत अच्छे तरीके से इसकी रणनीति भी बनाई है और दुनिया में कोरोना के बाद मंदी से सबसे तेजी से उभरने वाले देशों में से एक देश भारत है। हमारी अर्थव्यवस्था वी शेप में रिकवर करी है और अब इस पर भी काफी अच्छा असर पड़ेगा। शायद रशिया यूक्रेन युद्ध न होता तो अब तक तो हम बाहर भी आ गए होंगे।
All right, their Home Minister giving an assurance on the biggest concern to the economy, the inflationary concerns, and that the government has a roadmap to tackle it as well. Moving on then, the insurance regulator IRDAI has proposed the formation of Bima Sugam, an aggregator-like platform for the insurance sales as well as related services. So the industry feedback suggests that this platform is likely to charge commissions at a much lower rate than the current levels. And also now sources are telling us that PB Fintech, the owner of Policy Bazaar, has requested the IRDAI to allow them to reduce their commission rates. Yash is here to give us more details on that. Yash, it could be a game changer in the insurance industry also, with some of the aggregators in the digital space already in the listed space already, and they could face the heat as well as the competition.
Well, absolutely correct. These insurance aggregators could very well face the heat with this entry of a new platform, Bima Sugam, which will be responsible for sales, servicing and claims of insurance policies, possibly everything that Policy Bazaar does. And that is the exact reason why now what we've been given to understand from our sources is that PB Fintech, the owner of Policy Bazaar, has reached out to the insurance regulator. What is an important ask, which is to allow Policy Bazaar to reduce the commission on the platform, try to match it with the lower commissions that Bima Sugam is expected to have. This, remember, is as per industry feedback that the insurance commission on Bima Sugam could be 1/4 of the commission which, in the current market is being paid to aggregators like Policybazaar or for that matter agents. That's exactly why Policybazaar wants to stay relevant once Bima Sugam enters in the insurance market. And one very important which will determine this relevance would be the price at which it can sell insurance products, and hence this ask has been made with the insurance regulator to be allowed to reduce insurance commission. Why is it not being able to do so far? That's because any sort of benefits given to policyholders in terms of reduced commission are considered as rebates, and rebates as per the current regulations are not allowed. So even if Policybazaar reduces the commission, it receives less from the insurance company, but it can't pass on the benefits of that reduced commission to policyholders, and that's the actual ask. This will certainly impact the operational revenue of Policybazaar, how much we need to see, but it will come down in proportion to the reduced commission. We spoke to Yashish Dahiya, the co-founder and CEO of Policybazaar, on the very same issue. Let's hear out what he had to say on this one.
You're saying, okay, if it happens, if commissions become zero, will you also do commission zero? Will that mean thousands of crores of losses for you? Yeah, of course. 100%, right? Why else do we have that 6,000 crores of capital lying around? But the point is, I know you want that, and I know you want that fun, but the point is the world is not going there.
All right, so that's the industry view coming in. But Pavitra, we must note that Paytm launched first in the payment system. UPI was the government's free highway on digital platform, which changed that particular setup for the private companies. ONDC is coming, which is going to also attack the monopoly of Amazon's and Flipkart. And now this Bima Sugam could attack something like a Policybazaar. So the private players will have to deal with the government-led digital networks in the country, because government is clear that the people should not be really stuck with a monopolistic private player for being digital.
Absolutely. So let's see how that pans out. But that was an important story. Moving on now, commercial vehicle maker Ashok Leyland has unveiled a brand new ICV or intermediate commercial vehicle platform. The Partner Super will see CV manufacturers address the 9 to 11 ton range of its product portfolio. Now, this comes in 3 different models. The company's head of medium and heavy commercial vehicles spoke to Jude Sanad on how many trucks the company hopes to sell and the key factors that will really help them boost sales. Listen in.
Critical markets like Mumbai, Pune, Delhi, Chennai, etc., where customers prefer a light, economic vehicle which can do a run of, let's say, 400 kilometers per day. We needed a vehicle which can address need of these customers. And I'm confident with launch of this vehicle, at least it will add another 300 to 400 numbers on a monthly volume.
Right. So at present, where do these numbers stand? And I'm assuming 300 to 400 would bring it to what number per month?
Well, I would not like to discuss exact numbers here, but definitely it will help us in improving our market share in ICV segment.
Right.
Currently, we are around 25%, and I'm confident that it will take us to where we are targeting ourselves.
Right. And ICV versus MHCV, what is the market share like? You mentioned 25% in ICV. In MHCV, what is your current market share, and where would you like to go from here?
So overall, we have ended the H1 at around 30+% market share. And this has been good growth for us. When we look at last year, I think we have gained almost 8% in first 6 months of the year.
Right. Mr. Sanjeev, for the last few years, the focus has been a lot on LCVs, especially given, the kind of changes that the pandemic has brought to everyday business. But, earlier this year, there's been so much talk about how the MHCV segment is also set to grow on the rebound of certain select segments, much like, steel and e-commerce in particular. You mentioned e-commerce as well. Going forward, what are the key segments to watch out for in terms of growth accelerators for MHCVs and ICVs? Which ones are you betting big on and why?
See, when you look at India, consumption story is intact. And, look at government, how government is spending money on infra. So, to me, segments like cement, coal, steel, they're going to grow. All macro indicators are also talking about growth in these segments. Commodity cycle is positive. And of course, e-commerce is there. So these are the few segments, few applications which will continue to grow. And happy to say that AL has a strong presence in all these applications.
All right, that's the word coming in from Ashok Leyland. Let's also get you some exclusive opinion coming in from the BSE member as well as the market maven, Ramesh Damani, on why value buying goes a long way and also why he is bullish on PSU players, the defense opportunity as well as the India story. Listen in.
I think the key is, for me, has always been, to find value. I mean, you want to, it's like your mother taught you to shop, ki rupee ki cheez 98 mein kharidni chahiye. And that's the same true in the stock market. You want to buy cheap. Now, fashions come and go. Sometimes it's eyeballs, sometimes it's replacement cost, whatever. But you buy good businesses and you're willing to hold them for the long time, I think you'll do extraordinarily well. And what these gentlemen taught me is that unless you risk running very far, you don't know how far you can run. And the trick for me has always been to push myself to buy bigger positions, to, there's a saying on Wall Street that bulls make money, bears make money, but pigs get slaughtered. But that's not quite true, because sometimes you need to be a pig in the market. When the conviction is the highest, when the trade is at the best point, you need to bet big, and then you need to know how much you make. Just when I started the Wizard show for the first time, I used to buy Bharat Electronics. It was a 20 rupee stock with a 2 rupee dividend built in, 160 crore market cap. It's 60,000 crores today. And I think it can go perhaps double from these prices too. So, I mean, it's created long-term wealth. The mistake people make often is to bunch FMCG stocks versus all PSU stocks. These are all in disparate companies. There are some commodity stocks, there's some power stocks, and some defense stocks. So you need to learn how to pick the sector in the PSU that you're bullish on. I think the mistake a lot of analysts make is lumping them all together. So obviously you're going to come out with disappointing results. What if I bunched Himachal and Global and all those bad consumer stocks along with the levers and the Dowers of the world? Your returns wouldn't be that great. So I think that's a trap that a lot of people fall into. And these are good stocks, these are great businesses. The government, if you hear the Prime Minister speak or the Railway Minister speak, they're going to use the railway and the railway budget as a blunt axe for capital expansion. They're just going whole hog on these places. They're going whole hog on defense. I mean, for example, let me give you an example on defense and why it matters to India. The US produces 150 million artillery shells in a year. That's what Ukraine uses in a couple of weeks. So there's a huge shortage of defense equipment. And here these companies are already producing equipment and threatening to do more so by Atmanirbhar Bharat going more domestic source. So there's a great opportunity. They have good order books. They have excellent technological skills. And we are buying them literally, as I said, rupee ki cheez 54 mein, not even 98 mein. So, we're very confident about the play out in these sectors. A lot of what's happening in India excites me. And the reason for that is by just a freak of coincidence. We're at the right place at the right time.
All right, very interesting chat there with market veteran Ramesh Damani. Remember, you can catch the all-new season of Wizards November 21st onwards only on CNBC-TV18. Okay, with that, it's time for a short break on the show. But when we come back, leaders are in Bali, Indonesia for the G20 summit, which is underway. We get you details when we come back. Welcome back. You're still tuned into Business Lunch, and let's now get you the latest from the 17th G20 summit, which is currently underway in Bali, Indonesia. India is presiding over the summit and addressing the countries. Prime Minister Narendra Modi has called for a ceasefire and diplomacy in the Russia-Ukraine war. He also spoke of challenges presented by climate change, the COVID-19 pandemic, and the importance of India being energy secure. Remember, after this meeting in Indonesia, India will take over the G20 presidency for a period of 1 year. And on the sidelines, Prime Minister Modi also met with British Prime Minister Rishi Sunak, French President Emmanuel Macron, and the US President Joe Biden. Prime Minister Modi is also scheduled to hold multiple meetings with world leaders tomorrow. However, a meeting between the Prime Minister Narendra Modi as well as Chinese President Xi Jinping looks quite unlikely.
And staying with those updates coming in from G20 summit, well, the US President Joe Biden and China's Xi Jinping held the much anticipated meeting on the sidelines of the summit. Now, the 3-hour meeting was the first face-to-face since the US President was elected in the year 2020. Two superpowers, and CNBC's Martin Song is here with the latest update.
Not just a meet and greet, 3.5 hours of talks yesterday, late in the afternoon and stretching into the evening. And I guess they appeared open, candid, at times blunt. And significant because this is the first face-to-face meeting the leaders have had since U.S. President Joe Biden assumed office back in January of 2021. The key takeaways, the U.S. President saying that he is open to competition with China. That's fine, but he does not want conflict. Take a listen to what he had to say.
We had, excuse me, we had an open and candid conversation about our intentions and our priorities. Do I think he's willing to compromise on various issues? Yes.
So part of President Biden's comments included his personal assessment of the Chinese leader, Xi Jinping. And this was reassuring because he described him as a leader, Chinese leader, who he thought came across as willing to compromise. Now, on Chinese President Xi Jinping's part, initially it was all about pretty much boilerplate rhetoric, saying that, yes, he looked forward to working closely with the U.S. to try to improve the relationship for the betterment of the world. But in terms of compromise, he drew his own red line, saying that Taiwan is probably China's single biggest red line. And this is despite U.S. President Biden reiterating that, hey, the U.S. policy on Taiwan has not changed. So Taiwan came up still as a hot button issue. I think what's important here, and we've been talking about it as well earlier this morning, is that both sides appear to have agreed to set up, whether you call them teams or committees or groups of people at a working level. They push the work down, the granular work to the working level, their, I guess, underlings, as it were, to manage the relationship across all the different aspects of conflict, whether it's trade or technology or Taiwan or North Korea. That's what they plan to do going forward. So at least there will be communication and also exchanges at that working level.
All right, Martin, thanks a lot for getting us all of those details. We're going to keep bringing you highlights from the G20 summit through the day as well. But for now, it's time for another short break. There's lots more news and updates in just a bit, so stay tuned.
Welcome back. You're watching Business Lunch. A quick look at the market. Yes, market is flat at the moment. The key index, Nifty, is still holding on in the green, but on the flat line with 18,335 odd levels. But what has improved slightly is the mid-cap universe, absolutely flat at the moment, and Bank Nifty still is the outperformer. Some of the counters which have seen a little bit of selling from the top and in the last few minutes of trade is the consumption counters. Take a look at HUL at the moment, and some bit of action and sell-off seen in Asian Paints as well. Dr. Reddy's is also another such counter, and from the banking space, it's IndusInd Bank. Moving on then from the markets, well, billionaire wealth that had really risen rapidly after the COVID-19 pandemic hit, as stock markets as well as the valuations surged across the globe. But as 2022 rolled in, most of this wealth has been wiped out. In fact, Kiran Khatri reports on the swings in the fortunes of the world's richy rich. Take a look.
The world's 10 richest men doubled their fortunes in the first 2 years of the COVID pandemic. That's according to an Oxfam report released in January this year. The pandemic also created a new billionaire every 30 hours. However, for these billionaires, 2022 has so far been a terrible year due to the Ukraine war, soaring inflation, recession fears, and sell-off across equities and tech stocks in particular. Let's start with the world's richest person, Elon Musk, who recently took over Twitter. Amid his multiple U-turns on the acquisition, Musk's fortune has fallen by around $82 billion to below $200 billion. Jeff Bezos and Mark Zuckerberg's fortunes have also taken a hit of around $70 to $80 billion each this year, as the stocks of Amazon and Meta have been in free fall. The fate of China's wealthiest tycoons hasn't been very different, especially due to a massive market sell-off over President Xi Jinping's third term. Bottled water billionaire Zhong Shanshan's fortune has slumped by nearly $13 billion in 2022. Meanwhile, L'Oreal's Françoise Bettencourt-Meyers has seen her net worth fall by nearly $22 billion this year due to COVID curbs in China, the brand's key market. Moderna CEO Stefan Bancel and Zoom CEO Eric Yuan's wealth multiplied at a fast pace due to COVID, only to plummet even faster. Their net worths have dropped by a whopping 65% and 82% since their peaks during COVID, and the loss continues. But the most significant loss in terms of percentage has come from the crypto space. FTX founder Sam Bankman-Fried was still a billionaire last Monday. By Friday, his entire fortune was wiped out as his company filed for bankruptcy amid a liquidity crunch, and he quit as CEO. The crypto crash has another casualty. Binance CEO Zhao Changpeng lost over $77 billion in wealth this year, with Bitcoin staying below $17,000. However, the richy rich in India have been largely unaffected by global uncertainties. Gautam Adani's net worth has grown by more than $61 billion this year, and Mukesh Ambani's net worth has also jumped by over $2 billion. In Mumbai, Kiran Khatri.
All right, Kiran, thanks a lot for getting us all of those very interesting details. But on that note, we're going to wind down on this edition of Business Lunch. Thank you guys for tuning in. Midcap Radar is up next.